Our next speaker is Stenver Jerkku, the CEO of Solid World, who will be talking about harnessing the power of DeFi to tackle climate change, a new era of sustainable finance.
Hi there. My name is Stenver Jerkku. I'm one of the founders and CEO of Solid World, which is basically building capital markets to solve the climate financing. My background is that I've been in carbon space for almost 8 years, and I've been in venture-backed tech businesses for more than a decade. Previous companies I've done have been, for example, Clia. I was an early engineer over there. I took it from around C to Series B. It's a venture-backed tech business with which is now a New York-based unicorn, an enterprise SaaS business that works with Fortune 500 companies. And I currently live in New York, although I'm originally from Estonia. Here on my picture is my wife, who moved with me to New York to solve the huge challenges that we have ahead. A bit more about my background. I've also been part of eAgronom. It's a leading climate tech company in Central Eastern Europe. It manages 2.4 million acres of farmers and helps them become regenerative carbon farmers. I founded it and took it around Series B. And I've also been 2 years in a row in Estonian Founders Society as the vice president with Sten Tamkivi. Estonian Founders Society is the place where all the unicorn Estonian startups have come together. And in case you didn't know, fun fact about Estonia, the most unicorns per capita in the world. We're very proud of that, so we need to spread that message and knowledge as long as we keep that spot. And Sten Tamkivi is GP of a billion-dollar family house office in Estonia, who are also investors in Solid World. But today, I wanted to talk to you about carbon offtake agreements and the huge issues that we have in the carbon industry. So before I get deeper into it, let me just quickly break it down. What are carbon markets? And in this case, I'm focusing on the voluntary carbon market, not the compliance markets. These are two separate things. So the voluntary carbon market is mainly driven by investor pressure. Harvard Management Company, BlackRock, all these big funds, they have something called the term decarbonizing their portfolio, which means that they're pushing downstream all their sub-funds and the companies below them they should become carbon neutral. Now, the first thing that companies should do is that they reduce their own emissions. But it's impossible to become carbon neutral for most of us. We still pollute everything we do out there. You know, you go to shop, you buy even if you buy just fruits and vegetables, there's a lot of carbon involved in producing that. So in order to have that last mile carbon footprint removed, there's something called carbon credits in the voluntary carbon market. And carbon credits is literally paying somebody else so they will either reduce their emissions or sequester emission out of the atmosphere. Now, carbon markets currently are around $2 billion volumes traded a year. So they're not huge, but they're incredibly fast growing. And McKinsey, IFF, all these big names, they believe that the markets will reach 50 to 150 billion by 2030, which is the end of this decade. To fuel that growth, to make sure that there's carbon projects where you can actually buy credits, there's people on the ground who literally, for example, plant trees and promise to keep those trees there for 50 to 100 years or more. Now, the issue that we have right now is that there's a huge financing gap, because from the moment you plant the trees to the moment where you can actually issue certified carbon credits, it can take you 3 to 5 years. To fill that funding gap, we have something called offtake agreements, also known as forward agreements or pre-financing. Now, the issue with these forward agreements or offtake agreements is that they're purely pen and paper based. They're very untransparent. There are no price signals at all. So they're very illiquid OTC assets, very unstructured. And this makes it so we have like a cascading supply issues going on in the carbon market right now. Like we just can't find enough supply. I've spoken with some of the biggest corporates in the world. They say they're trying to find good projects, but it's very hard to do. And but the real issue is not that there's not enough supply. The real issue is that we're lacking standards and transparency into the underlying markets, because they're still in 21st century pen and paper based markets. I spoke with JP Morgan a couple of weeks ago, and they told me they want to deploy $10 trillion with a consortium of banks into green finance. Carbon should be one of that, but they say they just don't get it. It's so untransparent. They can't even run risk analysis on the underlying projects. Everything is so unstructured and different. Lots of corporates have exactly the same issues, and this is holding back capital. In fact, like, to tell you a story, I met an investor who said that he would like to invest into mangrove carbon credits, so mangrove restoration. One of the things you need to understand about carbon markets is that carbon credits are not made equal in voluntary carbon markets. We have credits which are priced few dollars per ton of CO2, like renewable energy credits, or machines in Switzerland which suck carbon out of the air and they cost like $1,500 per ton of CO2. So this investor was trying to invest in mangroves, and he said he heard that the price is currently at $70 per ton of CO2. And I told him, no, it's more like 30. And banks, hedge funds, family offices, they see the same thing. They see that if they want to invest in carbon markets, they need to become specialized carbon investor. Otherwise, it's so hard to make sense what's going on in the markets. This same thing is cascading to the supply side as well. I spoke with a farmer who proudly told me he got 80 cents per tree. When I ran the numbers for him, I was like, you got $5 per ton of CO2. This was a reforestation project in the EU. So these credits were probably sold off for like 20 to 30. You lost a lot of money over there. So I've met landlords who've been trying to start the carbon project for 5 years, some of the biggest landlords in the world, and they just say it's too confusing for them. They can't even put together a P&L. They hear prices over here and over here. Where does the truth lie? And we need to fix that. We need to start structuring these markets if we want to talk about scale. We need to make sure there are standards all the way from the beginning to the end that are fully transparent, fully auditable, and everybody can exactly see what's going on there. And once we have that, once we have standards, transparent underwritings, risk due diligence frameworks with money on the table for these standards, then the projects will naturally start converging towards these standards. So advanced financial structures are needed, along with transparency into the project monitoring and everything else. Monitoring is a huge topic, but I'm not here to speak about that. A lot of people already speak how we need more transparency into monitoring carbon projects. But I think what people don't talk enough about is how we need transparency and structure into the finances. When options and futures were invented back in 1800s, then farming really started to go. When Wall Street was invented, US benefited tremendously over that change. So having structured capital markets levels the playing field. It makes sure that everybody is more on an equal footing. They understand what do they need to do in order to get their job done. It reduces risk across the board. And there's a lot of ways how you can build financial structures. You can create green bonds that are made exactly to finance these forward projects. However, these are one-off things. Unless you do it very smartly, it doesn't solve the issue across the board. You can also create liquidity pools, which price certain types of assets and make sure there are real time and completely transparent prices for different types of carbon projects. And once you have those green bonds and liquidity pools, you can start building derivatives like options and futures. So I'll just cover a few things that's going on in regenerative finance world. A lot of the players and names you see in front of you, like Toucan or Neutral or SAS Global or Open Forest Protocol, are trying to solve that issue, including Solid World. And they're working with some of the most successful and biggest companies in the world, like MasterCard, etc. So Solid World wants to make sure we got standards from the very beginning when the projects are created, when they get their first financing. So Solid World has created a very bleeding edge risk due diligence framework. That framework, that underwriting of these projects covers climate, finance, legal, team, everything. And Solid World is planning to open source that underwriting methodology very soon. But just having an open source underwritten standard methodology wouldn't do it. Like, you can create as many standards as you want. In order for people to start using it, you need to make sure people know there's money on the table and how much. So that is why Solid World is creating liquidity pools which structure and price these different types of assets and building green bonds with different investor risk appetites and risk tranches on top of these liquidity pools. Toucan, one of the partners of Solid World, is trying to make the spot trading transparent. So Solid World focuses on the pre-financing, the offtake agreement parts, but eventually the credits get delivered, they get certified. You need to make sure there's an aftermarket for them. You need to make sure that now people can really start trading them and it can end up in a corporation's hands. So Toucan comes in and they're making sure that the spot trading is very transparent, the prices are transparent, and we can see exactly who bought the credits and how was the value flown throughout the system. Neutral is bringing market makers and high frequency trading to the carbon markets. The more market makers and high frequency traders you have, the more fair the market prices become. It evens the playing field. It makes sure that the markets react fast and appropriately to the events that go on globally. And it just makes everything less risky across the board. SAS Global is using AI to predict climate disasters in order to make sure that your risk due diligence is properly evaluated and takes into account the climate that has already changed a lot. The climate that we have right now is not the climate that we have 5 or 10 years ago, or even 20 years ago. So we need to already be forward-looking with our climate change events. And SAS Global has done a tremendous job over there. Open Forest Protocol is bringing real-time monitoring using decentralized third-party validators to ensure the nature restoration. So when you hear a lot of people saying how we need more transparency into the projects themselves, Open Forest Protocol is it. They're using satellites, on-the-ground people, and independent validators to verify that, yes, this project did what they promised. And these are really certified credits. Climate Collective is an organization that collects all these leading financial, distributed ledger, and AI solutions together, empowers them, and brings them in front of the right people. If you want to find out more about these different companies or discover more companies, just take a look at Climate Collective's members. And these companies work with some of the biggest companies in the world. Here's just a small handful of examples like MasterCard, Lighthouse, etc., etc. So if you want to learn more, please reach out. I'm sure all of these companies are very excited to offer and figure out how can we fix this carbon financing. Once we fix the carbon financing, then we can start talking about scale, we can start talking about different risk tranches, and we can really start fixing the climate change. I hope you enjoyed this quick overview of the climate finances. If you have any more questions, please feel to reach out to me, and I'm happy to talk with you.